Do we have sound now? Now I think we should be pretty good. Yes? Or not? Maybe. All right, we should be pretty good. Don't you love a live show? All right, let's get to work, shall we? The let's see here. The S&P. So yesterday, what happened yesterday? I think if you've been kind of following along with the commentary that I've been putting, even in the free videos, even here in Charts and Coffee, you're probably well aware that I'm really not making much of the debt ceiling as a factor to our trading. The adjustment that I've recommended, the adjustment that I'm making, the adjustment that I think works best in this environment is simply shorten the time frame. And it's not a matter of whether I should day trade or whether I should swing trade. That's not really the question at all, is it? It's really how long can I or am I comfortable committing to overnight exposure? The day trade makes sure that you don't have overnight exposure at all, right? If the idea is to enter sometime between, say, 8:30 Eastern, 9:30 Eastern to 4 p.m. with futures and or stocks and ETFs and options, cool, but you're done at 4. Then we can think about, well, what about if we do want overnight exposure, right? And this was definitely the case, still is the case in the Google alert that we sent out. Now, I'm not just talking about Google because it's moving. You'll hear a lot of chatter about Google. When I'm talking about a symbol that we're sharing together, it's because I alerted my mastery or the futures room or somebody to it, right? Otherwise, it's like if a tree falls in the woods, does it really make a sound? So ultimately, what we want to do here is focus on trends, right? And as I outlined in the Tuesday free video, we want to focus on tech trends. And there was a great question the other day, and forgive me for forgetting who asked it, but it was a great question, which was, what about crude oil and copper? I said, well, if crude oil and copper are not moving with the broader averages, the Dow could have something to do with it. The Dow is not in the same kind of uptrend that NASDAQ is in, but does it have anything to do with the debt ceiling? And my analysis, and therefore my take on that is no, it doesn't. Because debt ceiling is going to be an umbrella or a cloud that hangs over everything, not individual corners of the market. Copper and crude are more tied to the Dow Industrial Average. Secondarily, the S&P, and really not in any way the NASDAQ. When we think about what could be keeping them lower, what could be keeping the Dow lower, and not looking like the uptrend in the NASDAQ, look no further than things like financials and healthcare. And remember that financials are the number one weighted sector in the Dow. It may be the Dow Industrial Average, but I like to say Charles Dow is face palming somewhere because ultimately that Dow Industrial Average is weighted with financials, number one, tech, number two, healthcare. And if you kind of go down the list, eventually you'll run into transports and industrials. It's a very different composition. And the composition of our indices matter, right? That's exactly what we talk about in Sector Secrets Mastery in the futures room. We're not trading the S&P, gang. We're trading 500 stocks that are weighted in a high concentration manner. We're not trading the NASDAQ. We're trading 100 stocks that are weighted in a high concentration manner. So it's the ingredients in many ways, not just the dish. All right, so let's get into the questions. As always, I think our audio is good. All right, fantastic. Thanks for flexing with me there. All right, good morning. Hey there, Nomo FOMO. How are you, my friend? Melly, sure. Let's take a look. MELI. And Nomo, let's see. Ready for a breakout or do we wait for a pullback? Fantastic question. All right, so what would determine which we do? And if you've been watching this show for any length of time, you know what determines which I will do has to do with the market structure, right? Everything. The tools that I use and also the tools that I discuss, the levels that I discuss in This Week in the Market, for those of you that are checking it out, you can check out a $7 trial over at thisweekinthemarkets.com. But the thing that I like to keep in mind is what's gonna work with basically everything, right? So let's type in Melly here, and we're going to start with the bottom of the chart. We're going to start with the underlying market structure. It doesn't matter what style of trading or even what type of indicator you're using. There is no exception to this comment. Structure dictates strategy, right? There's no exception to that. In an uptrend, we have a different strategy. We have a different set of indicators. I think many of you know this, right? In a choppy market, again, different set of strategies. Now, if we have a choppy market, the next job is to ask, is it bullish chop or bearish chop, right? And in this case, in Melly, Nomo FOMO, fantastic name. It's bullish chop. Look at how we have the history of the market structure. Yellow trend, now neutral, but the one that preceded was green. I will still use a slow stochastic. The absolute best way that I have found, and free, gang, to find overbought and oversold. Listen to me now, believe me later. 25 years, I haven't budged from these settings. 21K, 3D, 80 overbought, 20 oversold. Just put it on a chart, find a market and chop, and wait for those moves. And if you want to couple that with automated support and resistance by way of the Darvis 2.0, Melly would be a fantastic combination. That would be a fantastic combination for Melly, I would say, Nomo. And the last thing, if you want to do it, is jump on over to, say, TradingView and take a look at where those volume ledges can be. Price-based volume, there's no strategy that is not going to benefit from price-based volume. So if you take a look at the volume profile, the price-based volume, really interesting on Melly, you've got some pretty good support sitting at about 1184, right? And that's the way I would look at that. All right. Thank you. Appreciate that. So again, everything I just showed you, regardless of what other indicators that I may or may not use that you like, everything I showed you does work well with others. It plays well with others because structure, every indicator needs to be chosen because it's the right tool for the job. And visible range volume profile, my preference, it's an anchored volume profile. Once again, it's going to play well with others. Don't we want to know where the size is at different price levels? Doesn't matter if it's a weekly or a 1 minute, it's going to help. All right, so moving on to Dave asks, struggling with entries and exits on the ES. Dave, what time frame? What time frame are you looking at there? Just so I can help you best in terms of time frame. Now the ES, let's talk about the ES a little bit broadly until I see what your answer is there, Dave. If you look at the ES a little bit more broadly, let's remember that, and we've talked about this for a bunch of days, right? Which is ever since May 8, we've been stuck in a range, really just back and forth. We've been stuck within the May 10 range. And then if you recall, I think it was just yesterday. So minutes intraday, sure, Dave. So remember this. Yesterday's candle, which, by the way, if you checked out Tuesday's video, Friday's video, I said, yes, the debt ceiling is the conversation, the news, right? You know, my mom used to call, I don't know how many of you had TV restrictions when you were growing up. Growing up until college, I was allowed 1 hour of television per day. I am so thankful for that. My mom called it the dumb box. And you know what? I call it the dumb box to this day. Whatever the dumb box is talking about is designed to grab our attention and entertain us. We know this, yes? So what's been the constant rotation? Debt ceiling, debt ceiling, debt ceiling. If you look back over decades and over 6 dozen debt ceilings that we've come up against, the story ends the same way every time. There's no certainty, obviously, in anything, including trading, but there certainly is a probability. Yes, we're going to find something. And then what was the news yesterday? Whether it was the president, whether it was McCarty, I'm not talking about politics, gang. I detest politics. However, that is what's moving this narrative. And what we have is the parties coming together and saying, yeah, we'll probably find a solution. No kidding, right? Is anyone here shocked? They're going to find a solution. Okay, fantastic. That's how every one of the previous 70 plus debt ceilings were dealt with, right? 78. Okay, the bot's telling me 78. So I remember we were chat GPTing that in the room. Anyway, so we get some good news, the markets take off. This is a bullish neutral market, right? And then as soon as we were able to get above the Wednesday high, I think we talked specifically about getting above 41.74. I think in the previous charts in coffee, I said, look, now the market has essentially tipped its hand, right? Now we've got that breakout. Up until this point, to your question, Dave, up until this point, we've been stuck in a range. And even daily time frames, even intraday time frames. Sorry, you asked about intraday, right? Intraday time frames are going to be subjected to that issue. So what I would recommend is when we're in a very small range, pick a side and then whatever your typical number of trades are. Rog, I do 8 round trips a day. Rog, I do 4 round trips a day. Cut it in half. Only allow yourself 4 or 2. Whatever your normal round trips are, cut it in half. And that's going to force you to become more discerning about the setups. Wait for overbought, oversold levels. If we're stuck in a range, wait for overbought and oversold levels. I think if you calibrate to a slower pace, Dave, hopefully you'll be less frustrated. And when you do get that trigger to enter and you scale in, as I do personally, you'll get more potential follow through. And it's the follow through that's so difficult. I don't think entries have, you probably will say, yeah, Rog, it's not been the entries that are difficult to come by. It's been that follow through. If that debt ceiling narrative is getting a little less murky, equity markets are poised to move higher, especially the Nas, right? Followed by the S&P, followed by the Dow, as long as healthcare and financials can keep moving higher, right? That's the end of that story. That's how we're looking at understanding the path of least resistance, which I still believe, and I've said for a while, is up, right? Okay, next up is, let's see what we have here. What are the impacts of the unemployment? Hey there, Mark. Unemployment, well, do this. This is what I do. We know it's coming out at 8:30, right? So then I put a vertical line at 8:30. Were we already a little bearish going into the 8:30 hot zone? Yes, we were already a little bearish going into the 8:30 hot zone. By the way, what's a hot zone? That's a Ragheeism for scheduled, high impact, high volatility, high volume release. And you can see since 8:30, we've been moving lower. Is that the only thing moving the market today? I would say, Mark, let's jump on over to the calendar. Because I would say, in terms of everything that we could be dealing with here today, initial claims, unemployment claims are probably going to be the least of our quote unquote worries. What do we have? We had the unemployment claims. We have the Philly Fed Manufacturing Index. We have FOMC member Jefferson, who conceivably has been talking for maybe 9 minutes. We have member Barr starting the second day of his testimony on the Hill regarding, I believe it was the financial crisis with regional banks and the regs. We have existing home sales at 10. We have member Logan speaking at 10. And the hits just keep on coming, right? And then we have some guy named Powell speaking tomorrow. So ultimately, is that the reason why we're heading lower? I would not say solely that's the reason, but the impact every Thursday at 8:30 is volatility, right? And if unemployment claims were a little bit lower, which they were, and I mean moderately lower, but the trend is lower, that actually green lights the Federal Reserve to potentially maybe pause for longer or maybe sneak in another quarter point hike. I'm not going to speculate on that. What I will do is I will take a look at the Fed Fund futures, whose job it is to understand what those probabilities are. And then I'll take a look at those target rate probabilities at the Fed Fund futures. I'll take a look at that around. Now, it would be easy to do that now, but the truth of the matter is, let's get past existing home sales and then take a look at that Fed Watch tool that I've shown you all many times. Then I would say, get down to that. Yeah, Dave, when it comes to order execution, all right. So all we can ever talk about on this side of the mic and this side of the camera, if you're on the YouTube, Twitter, or whatnot, all we can ever talk about is what we do. I'm not speaking for everybody. I don't care what anybody else does, right? Neither do you. You want to stick with, Rog, I understand this. This is the repeating process I trust, and then you just get to work, right? I've got a book on my bookshelf back there, and I was reading it again. It's actually one of my favorite books on the shelf. And it says, not caring what other people think is a superpower. And it applies to our trading approach as well. So when it comes to order execution, if that's where the struggle is, my recommendation after reducing the number of trades that you're allowed to take, forcing yourself to be more discerning about the triggers. The second thing is what I have preached, quite frankly, for over 2 decades. It's the same thing that was taught to me by my mentor. Price conditional orders. John has a great talk. Many of you have probably also seen where he talks about the garden lady. Who was the garden lady? She was a woman that would pick up the phone, put in an order, and go tend to the garden. And oh yeah, I think she'd trade something along the lines of 100 full-size S&P contracts. I don't know many people with the cojones to do that, right? So she would just pick up the phone, put in her limit order. And how many of you don't know what a limit order is? How many of you don't know you could enter with buy stops and sell stops? Whether it's a momentum strategy or an exhaustion strategy, having a price conditional order entry approach, Dave, is going to absolutely change, number one, the discipline around your trades. And it actually frees you up to not be staring at every tick and hopefully catching the market order button just right. All right. So one of the rules of the garden lady, the story that John tells, is that she found 3 things that she was a broker. She found 3 things that most of her losing traders did. And I believe number 1 on the list was market orders, right? The second was overtrading, which, by the way, is the same thing. Market orders are the gateway drug to overtrading. You're never going to find an overtrader who's not using market orders. You can overtrade with any kind of order for sure. And the last one was placing stops too tight, right? So order execution, as I was taught and as I teach, use limit orders. That means you had a plan. You know what the price is that you want to enter at before. This could be for day trading too. Those of you that day trade with me in the futures room and in the sector secrets, whether we're day trading options, which I do quite actively, we have anywhere from 3 to 5 day trades every morning within the span of about an hour and 5 minutes. And I don't say that to say, oh, look how much trading we do. I say it's a consistent approach. So between 9:30 and 10:35, we have anywhere from 3 to 5 day trades per day. And then I cut it. That's it, right? Pencils down. And then if I choose to come back for the afternoon, there's another specific window. And in those windows, what do I do so I can continue to scan, looking for opportunities in crude oil, bonds, the indices, individual stocks, sectors. We had a great day trade to the upside in XLF, right? But how did we enter? Dave, limit orders. And I'm very passionate about that because I find that a lot of traders struggle because they just were never taught how to control their own order flow, right? So yeah, I kind of go off on that topic because I'm very, very passionate about that being one of the main tweaks. It's just a tweak, right? That we can make in order to, well, frankly, be more disciplined traders, which I know it's something we all want to do. I know it's kind of fun to be freewheeling, and I get it, right? But I take my business of trading very seriously, and one of the best ways to keep on track and stick with a trading plan, which is another issue a lot of traders have, right? Aside from order entry, and is sticking with the trading plan, which is just under that discipline umbrella. Make your order entry just part of your discipline plan. Anyway, all right, I'll step off the soapbox now. Thank you as always, gang. Think about those limit orders. If you don't know how to use them, what they are, ask me in the next Charts and Coffee. I'm happy to walk through that. Bracket orders, Stephen. Yes, bracketing OCO. I don't have a problem with that because those two, to your point, those two are price conditional orders. Absolutely. Absolutely. All right. And so again, Mark, make sure you check out the clock and then the reaction. And again, you want to look at the reaction after any hot zone, including unemployment claims in the dollar via the 6E, in yields, pick your flavor, ZT, ZN, ZB, and the ES is a great place to look for clarity on the indices. All right. Good stuff. Good stuff, gang. As always, what's the website? Michael, for the Fed Fund Futures, Google Fed Watch, CME, Chicago Mercantile Exchange, CME Fed Watch Tool, and it'll be the first hit. CME Fed Watch Tool. All right, gang, I'll see you tomorrow, same time, same station. Be good to each other.